Is Constellation software too cheap to ignore? This is what we are going to talk about today. I have received many comments about Constellation software from YouTube, and in this video I want to talk about this quality company that has dropped a lot. If you look at the drawdown of this company, the company is down 45%. This is the largest drawdown we've had in the history of the company. Their shareholders were very proud of being investing in a stock that has never dropped 30%, and now we are dropping 45%. So what is happening over there? And is Constellation software a golden opportunity right now? And will I buy it? Okay, this is what we are going to talk about today in this video. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I love these opportunities where a quality company is dropping significantly and nobody knows if they will rebound or not. It's not because the company is doomed to fail. It's just that people don't know. So it's a big question mark. So as always, Wall Street sells first and then ask questions. But first you sell and then you investigate. Now you have a lot of reasons why Constellation software is dropping. The first one is the CEO left. The CEO left after some great decades of management. I read all his letters. If you can go back in time and read all their letters, and basically you had the CEO is Mark Leonard. He was diagnosed with some health issues, so he very suddenly resigned. People were very happy to buy Constellation software because they knew they had a genius at the helm of the company. The genius is no longer there. So that's a bad argument, and that can be very detrimental to Constellation software. In the past, the company had built some, I would say, premium prestige, and the valuation of the company was high. You can go and check the price to free cash flow of the company. Actually, you have several ways of looking at the free cash flow for this company. You have the price to free cash flow, but also what they call the free cash flow available to shareholders. Free cash flow available to shareholders. Anyway, you can calculate this price to free cash flow available to shareholders. This is maybe a better way of looking at the valuation. Okay? And did I create it? I don't know. I'm not sure. Maybe I have to adjust it. Anyway, let me first look at the price to free cash flow. You will get my point. Over the past decade, the price to free cash flow of the company has gone up a lot. We went from a price to free cash flow of 20 to 25 to 30 to 35 because the management was exemplary, because people believed in the thesis, and because people loved Constellation software. It was a serial acquirer. They acquire niche software businesses. They've been doing this successfully for more than 20 years. So yeah, you can pay a premium because you have visibility of earnings. But the master is no longer there. The genius is no longer there. That's the first reason. That is a very valid reason of having a stock price drop. At the same time, you have all software companies that are down. With the rise of AI, people think that software companies will get disrupted. So maybe Constellation software will be impacted. After all, the business model of Constellation software is very simple. They have a pool of capital every year, and they acquire dozens and dozens and hundreds of companies that are niche, vertical market software companies, which means boring, old, niche software companies, family-owned companies that either want to be acquired by private equity or be acquired by Constellation software. And Constellation software has been a great house, decentralized, so they just buy you out and they let you do whatever you did in the past, but you can cash out if you are the founder. If you are a family-owned business model, you are under this house. Anyway, this has been the philosophy of the brand. Now that the whole software ecosystem is being disrupted with AI, Constellation Software will get disrupted. Okay? So all the software companies are going down because of all these uncertainties. With the rapid pace of AI, nobody knows what the niche software industry will look like in 5 years. So the visibility you had for the past 20 years is no longer there. Literally, the visibility has shrunk to almost zero. What will AI do to software in 1 year? Nobody knows. What will the world look like in the industry in 3 years? Nobody knows. And now the whole premium valuation, because of sustainability of returns, premium management team, visibility is no longer there. So the price to free cash flow of Constellation Software has gone from 36 to now 17. You have to adjust the price to free cash flow to account for the real price to free cash flow that is here. You know what? I can show you so you don't even have to do the work. The free cash flow available to shareholders. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. You can compare the free cash flow on a GAAP basis of this business, that is in purple, and the free cash flow available to shareholders, that is in orange. You see there is a clear gap. On the last 12 months basis, the normal free cash flow, the official free cash flow is $2.5 billion, but the real free cash flow available for shareholders is $1.7 billion. It will create a gap in valuation. So the price to free cash flow is 17, but the real price to free cash flow is not 17. So the title of this video should be, is Constellation Software too cheap to ignore? If you really account for this metric, it's not that cheap actually. I can show you the price to free cash flow and the real price to free cash flow over time. Okay, this is what we have. Free cash flow. Fair enough. So the official price to free cash flow is 17, but the real price to free cash flow is above 30. You have a clear gap. So you are talking about the quality business model at a real price to free cash flow of 30, 34, 35. We are not excessively cheap. We are not very cheap actually. Maybe you have some adjustments to make. Maybe this ratio is not 34, but it's roughly 30 or a little bit below 30. Fair enough. Depending on the angle you want, if you want to be bullish or not, we are not at 17, right? This is the point I'm trying to make. This is not for other software companies when you actually have a price to free cash flow of 17. I'm thinking of, you have a Salesforce that is in this range, Adobe that is in this range too. So Constellation Software is not as cheap as people like to believe. But regardless, if you look at normal ratios, we are at the cheapest level we've seen for the past 10 years. The whole premium valuation that the company gained years after years disappeared in 1 year. The premium valuation that has been built for 10 years because of resiliency and visibility, boom, washed out. So I could totally understand why people sold Constellation Software. The CEO is no longer there, you don't have visibility, the valuation is stretched, you sell. The official price to free cash flow was 35, which means the real price to free cash flow was above this. I can show you here. The real price to free cash flow available to shareholders was 60. Of course, I mean, it was extremely high. The valuation was high. The business was premium and the valuation was premium. People sold this when they saw some panic. People saw this before. And now the valuation has gotten cut in half. The business is down 50%. Will Constellation Software rebound from here? After all, we are talking about the business with extraordinary margins. We have revenue that is growing double digits, net income growing double digits. Free cash flow, even if you adjust for the free cash flow, growing double digits. They don't issue shares to make acquisitions, which is very rare in the serial acquirers space. They are efficient. Will AI improve their business model or not? My guess is AI will obviously disrupt them, but I can see potential tailwinds. Now all the software companies are going down in value. And the business model of Constellation Software is to acquire other software companies. So actually that's discounts for them. I mean, every year they want to buy companies. Now everything is cheap, so you can buy more at a cheaper price. So I think AI will be fine for Constellation Software. The new management team is fine also. You have somebody that was here at the beginning stage of Constellation Software, and Mr. Miller joined CMG from Canada, Computer Modeling Group, and he went back here to Constellation Software. So the current CEO, the new CEO, is somebody that understands the philosophy, the mindset of Constellation Software very well. The CEO is very competent, and actually now everything is in cheap territory. So it's Christmas for them. They can acquire better deals. And we have analyzed the Constellation Software inside my coaching program. And we concluded that size was a big problem for Constellation Software. Size is an anchor to performance. Because if your business model is to acquire niche businesses, when you become too big, niche businesses will not move the needle to grow more than 10% per year. So as time passes, you have to acquire bigger and bigger businesses. And most of the time, bigger businesses have a bigger valuation. So the price paid is getting higher and higher and higher. If you check the goodwill of the company, if you check Constellation Software and the goodwill growth, you will see that the business has increased their goodwill more and more, which means you pay up for bigger and bigger businesses. We didn't have this problem back in the days. Anyway, let me check on Stock Unlock what you have for the goodwill so you can understand my point. My point is they have become too big, so they are overpaying for acquisitions. So they are getting less and less efficient over time. I can go to the balance sheet, I can go to the goodwill. Here we go. This is your goodwill over time. You can check the percentage change. It is accelerating. You are paying more. You are overpaying for your acquisitions. And if you are overpaying for your acquisitions, you are less and less efficient. You can check the ROIC of the company, the return on invested capital. In the past, it was north of 50%, 60%, 70%. And as you grow in size, as you are doing extremely large deals with big goodwill, big acquisitions, the efficiency is going down. And now we have a ROIC that has decreased to 20%. Will the efficiency rebound? Will the efficiency collapse? Will the efficiency be stagnant? I don't know how to answer this question, so I'm out. I don't want to be invested in Constellation Software. And actually, you can see that the business model relies on acquisition. They will not grow organically that much. You can go to the KPI section here on Fiscal AI. By the way, I'm using Stock Unlock and Fiscal AI. If you want to use these websites, you have discount codes in my description to use these websites like me, but cheaper, like 10-15% cheaper if you click my links in the description. So use my links, that's literally cheaper for you. And I can check the total organic growth for the business. So that's the organic growth for Constellation Software. You know what organic growth is, right? Either you grow because you are making an acquisition, so you acquire your revenue, or you grow organically with your businesses that you already have. You can check for the past 10 years, the organic growth has been almost zero. 1, 2, -1, -3, 7, -1. You have what? A growth rate of 1 or 2%? Quite bad. Which means the only way Constellation Software can grow is by acquisitions. And with size, the quality of the acquisitions has deteriorated. they need to overpay. Now, what did I say before? I said that now with this AI bloodbath, software bloodbath, the valuations of all the software companies are going down, which means it will actually be very good in the short term for them. The problem they had in the past of overpaying will no longer be there because everything is cheap. So actually, Constellation Software will get some help from the current environment. But after this, if or when software companies are getting a better value over time, the valuation will go up again and we will have the same problem. You have a temporary tailwind, but a long-term, a permanent headwind, which means size. But you have other ways to invest in this business model. They spun off Lumine, they spun off Topicus. So either you can choose to invest in the mother company Constellation Software, or you can invest in Topicus or Lumine that are very good also. With the same philosophy, this is almost the same business model, but cheaper, smaller, okay? Smaller so they don't have this size problem. So Constellation Software, I think that will be completely fine in the short term, but size is a problem. And the genius CEO is no longer there. And for all these uncertainties, all these question marks, I'm not invested in Constellation Software. And I don't plan to be invested in Constellation Software. Now the stock has gone down significantly, but I don't know if they will rebound from there. I have found better opportunities. I think it's a pretty good deal. It's pretty interesting for those who want to become shareholders, but they have a size issue that I don't like at all. And I don't want to be invested in serial acquirers. So for me personally, I'm not buying the stock. I would rather invest in companies that are doing buybacks every year. Constellation Software has never done any buybacks, and they don't plan to make any buybacks in the future. So I only want to be invested in companies that are doing buybacks, repurchasing their own shares. Constellation Software is not one of them, so I have to stay disciplined with my method and stay away from Constellation Software. I hope this video gave you enough information so it can help you whether you wanted to buy it or sell it. But yeah, I'm not touching Constellation Software, and wish you the best if you want to invest right now in the stock. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.